John Higgins, Mortgage One. Happy Monday. So last week, we got the jobs numbers. That's one of the bigger numbers that we receive each month and does have a big impact on which direction mortgage interest rates are going. And last week, we did see the headline number come in at 143,000, which was below expectations. But when you add in the revisions for November and December, which added nearly 100,000 new jobs, the overall impact was above expectations. And we did see a little hit to mortgage interest rates, a slight tick up, but nothing major. So this week, we've got another big number coming out. We've got the consumer price index, and we know that the Fed is targeting 2% on the inflation rate. So depending on which gauge you look at, either the CPI or the personal consumption expenditure, the PCE, we're still above that 2% level that the Fed is striving to get to. Right now, we're looking at an expectation of about 0.3 of an increase in inflation. So if you multiply that by 12, that's 3.6% for the year, and really not the direction the Fed is looking for. If we got a little tick below at maybe 0.2, that would be welcomed by the bond market and certainly would have some improvement on where our mortgage interest rates would go. So each week, it seems like we have one or two data points that are absolute market drivers. And this week, the CPI will be that gauge that drives the market. So let's take a look and see where we're at with regard to mortgage interest rates. This is a chart of the last 12 months. And as you can see, over the last couple of weeks, we've had a nice little downturn in interest rates. We poked our head above 7% and now are starting to break below 7%. And the trend, not too bad right now. The 10-year Treasury at 4.5% gives us a little ceiling. We're just below that at 4.49 and kind of hanging on there. So this inflation number that we got out this week will certainly give us some direction, whether we continue the downtrend on mortgage interest rates and head closer to 6.5%, or if the number comes out a little bit hotter than expected, that could push our rates back towards 7 and maybe above. So we'll give you an update next week after the inflation number. Until then, have a great week.